When most people think of successful traders, they often envision extremely bright individuals who attended the finest schools. These geniuses are some of the sharpest minds in the world, and they use their intellect to profit from the markets. But is this always the case? Was there ever a time when a genius, a man who might actually be one of the most intelligent human beings to ever walk the planet, went bust? Sir Isaac Newton is widely regarded as one of the most influential scientists of all time. His views on the laws of motion and gravity have shaped our understanding of the universe for centuries. But what about his investing? How did Sir Isaac Newton do as a trader? In 1711, the South Sea Company was founded primarily as a way for the British government to manage its debt. With numerous unpaid bills due to the War of Spanish Succession, the British government began to offer stock in the South Sea Company. Owners of the shares were not guaranteed repayment of principal, but they were promised interest payments. This did not bother many investors, as they believed South Sea Company offered the potential for enormous gains through its trade with many countries around the world. The company was not actually profitable in its early years, but the power of greed moved the price of the stock higher as investors continued to dream of enormous returns. By 1720, the British government decided the South Sea Company would take over most of Britain's debt. This caused prices to rapidly increase as the bubble continued to grow in size. Sir Isaac Newton was an early investor and profited handsomely as the price of the stock rose. Now, Newton was smart, really smart, and he knew that this was going to end badly. In early 1720, he decided to close his position and take his profits while he could. Records show Newton was up about 20,000 pounds at this point, the equivalent of around $1.6 million in our modern times. A wealthy man in his 80s, Newton did not have much to worry about in terms of his finances. All was going well until he started to notice that the price of South Sea Company continued to move higher. Day after day, the price continued upward, and Newton just couldn't make peace with the fact he closed his position too soon. He began to think about all the profits he left on the table. As the mania continued, Newton just couldn't take it anymore. He re-entered in the summer of 1720 as South Sea Company began its parabolic move. Without knowing it at the time, Newton was actually buying close to the top. As prices began to decline, he believed it was just a normal pullback, until things got dramatically worse in the later part of the summer. A few months later, Newton liquidated his entire position for a massive loss. What can we learn from the South Sea Company bubble? If a man of Sir Isaac Newton's intelligence can fail, is all hope gone? Are we too bound to forever fail and lose in the market? I think this episode illustrates a few important concepts that are at the core of trading profitability. First, no matter how smart someone is, no one is smarter than the market. Anything can happen, and no one can consistently predict price action. Rather than being angry or frustrated at this fact, our job is to embrace it and implement it into our trading. In other words, if we know we cannot predict the future, our goal should be to manage our risk on each and every trade to protect ourselves should things go wrong. If Sir Isaac Newton had used a simple rule to sell his position if it fell 10% from his purchase price, he would have taken a loss, but not a massive loss. Cutting losses is the only tool we have to prevent huge losses. Plan your exits before you enter into a trade, and sell your losing positions quickly before they get out of hand. To download a free spreadsheet to help you plan out your trades, visit my website. The second lesson from this episode is that the markets can move in irrational ways for much longer than most can anticipate. Just as Newton said an object in motion stays in motion, a stock moving higher will tend to continue higher as a trend takes place. While it may seem extended in the short term, months later you may come to realize that this stock was actually just beginning its move. Another important lesson from Sir Isaac Newton is to remember that you will never sell at the top. It's just impossible. While it is easy in hindsight, no one does it in real time. Rather than beating yourself up about this or continue to try to sell at the top to prove how smart you are, remember, the key to successful trading is to have big winners and small losers, not to sell at the exact top. If Sir Isaac Newton would have tuned out the crowd, dropped his ego, and just been happy with his large profits, he could have avoided the massive losses that would take place later that year. Finally, the most important takeaway from this event is that there really is nothing new under the sun. ARK, Zoom, NEO, Peloton, and many other stocks would go on major parabolic moves in 2020 and early 2021. When we look at the chart of South Sea Company, we can see it formed a high tide flag pattern before it went parabolic. This is eerily similar to the action of Bethlehem Steel in 1915 and Taser in the early 2000s. Even though some of these stocks traded over 250 years after Sir Isaac Newton, these same patterns will continue to repeat again and again, since human nature never changes. If you've ever got caught up in the mania of trading, don't beat yourself up. Learn from your mistakes and prepare for the next uptrending market. Conversely, the next time you find yourself in a big winning stock and begin to think you are a genius, remember that time when the world's smartest man got caught up in a mania and went broke trading.